All right, hello, this is Melissa, the insurance exam queen. This is a property and casualty game night. We're going to start with general insurance, or some of you have that chapter, but it's called insurance terms related concepts. Same. So if you are watching this on YouTube, just follow along with the game and write your own answers down so you can certainly, like, in a way, participate. And somebody is drawing on the screen. So I don't know how to turn that off. Let me see if I can find a way to turn that off. Disable annotations for, okay. All right. So let's just go ahead and get started. You'll catch along. If you don't know what you're doing, you'll catch along or just follow along. Oh, where's my sound? Also, I like sound. An agent, as an agent, you now have authority to write contracts for customers. Where do you have that power? Where does that power come from? Express authority. Okay, so there are three main types of authority that you have as an agent. There is express, implied, and apparent. These are your three authorities. Express is expressly written down. It's what'll say you're allowed to do this, you're allowed to do that, you're allowed to do this, you're allowed to do that. And you know you're allowed to do it because it's written down. And being able to write contracts, that just means you're selling policies. Every policy is a contract, whether it's a homeowner's insurance, an auto insurance, it is a contract. And when you're writing a contract, you're basically selling policies. And that is definitely one of your written powers that you have as an agent. The key thing here is remembering express is written in the contract. Express is written in the contract. Express is written in the contract. You know that you're allowed to do it because it is written in the contract. All right, nice job, Richard. You got that the fastest, the quickest, and the most correct. Insurer write the policy, customer decides whether to take it or leave it. We gotta do some editing on these. Adhesion, yes, adhesion. So this one is it needs to be edited, but the insurance, the key thing that it's asking here is the insurance company writes the policy, and then the customer either takes it or leave it. What we're saying here is that whatever the insurance company writes down, you have to take all of it or none of it. You can't say, well, I want this section and I want this section, but I don't want the middle section. You can't do that as a customer. You either have to take all of it or none of it. So you either need all of it or none of it when you buy the insurance policy. Now, of course, you can add or remove coverages, and that's different. But the main contract is written this way, and you have to take all of it. So adhesion is like sticky. You have to stick to it. So when you buy the policy, you're sticking to the whole thing. Like, I like to think of like an insurance contract as that like sticky fly tape paper. You've got to stick to it. And it's sticky on both sides because adhesion kind of means two things. One, the insurance company has to stick to what they said. And then the client, the customer, has to stick to the entire policy. They can't not take all of it. They have to have all of it. Yes, they can add coverages, but they cannot change the way the main contract is written. And then even if you were to add another coverage, the way that coverage is written is going to be written the same for you as everyone else who buys that additional coverage. I don't always say buy additional because additional coverage you don't buy, it's automatic, but who buys those endorsements. So if I buy an endorsement and you buy the same endorsement, it's going to be typed out and written the same. I can't make them. Can you change this sentence? I don't like the way you said that. I want you to say it like this. You can't do that. So adhesion, you have to stick to what they said in the entire contract, and the insurance company has to stick to what they said. That's adhesion. Adhesion is sticky. You have to stick to what you said. You have to stick to the entire contract. All right, next question.
It's two-sided.
Yes.
Right.
Yes. One side is the insurance company has to stick to what they said. If they said they're going to cover you for XYZ, if XYZ happens, they have to cover you. You as the customer, you have to buy all of it or none of it. You can't say, I only want section A and I only want section D. I don't want anything else. You can't do that. You have to buy the contract as it stands.
That's okay. Thank you.
Yep, absolutely. Yeah. And feel free to ask questions. Not a problem. Okay. Woo, big change there. Okay. The insurer the insurer sells completely outside of the United States. So they're selling policies that are completely outside the United States. Hint, country. They're in another country.
Alien.
Alien, yes. Out of the country is alien. So if they say another country, if they say another insurance company is in another country, or if they list another country, if they say it's in England or it's in Germany or it's in Spain, those are other countries. They're going to assume that you know that the names of other countries. And if they use the word country, if they say an insurance company is in another country, what is that? What type of insurer is that? So alien is other country. They're in a whole other country. They are alien to the United States.
And domestic is, and like I'm in Georgia, domestic is Georgia.
Right. Domestic would be domestic. And it's not technically, you can have a foreign company in Georgia too. Domestic says this is where the insurance company is incorporated, meaning this is where they started their business. Because like every company has to start in a state, and every state has different rules about how companies get started. So if you get started in Texas, it's going to have different rules than getting started in Ohio. So wherever you get started, wherever your headquarters is, your main location, that is where you are domestic to. And and an insurance company can only be domestic in one state. So the state that I started my company in, the state that I am incorporated means we started our corporation here in this state is where we started our corporation. And then we sell in that state. That's domestic. If I am domestic to Georgia and I'm selling in Georgia, that makes me all like, I'm incorporated and I'm selling in Georgia, I'm domestic. We say one state when they're talking about domestic. Foreign is if I'm incorporated in Georgia, but I'm selling in Alabama. In Alabama, I would be foreign because I am selling there, but I am not headquartered there. I wasn't founded there. I wasn't started there. I'm selling there, but my base, my home base, my headquarters are back in Georgia. So an insurance company can only be domestic to one state, and then they're foreign in every other state that they're selling in.
Gotcha. Thank you.
Perfect. The bigger the group of people with a similar exposure to loss, the more predictable actual losses will be. What says that? Law of large numbers. Yes, 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 yes. So the law of large numbers is the basis of how insurance is able to work. If they're going to cover all of these people who can get into accidents and their homes burned down, they need to know the statistic probability of how likely that is to happen. And they use the law of large numbers to figure it out. And the law of large numbers is basically what is the average? That's what the law of large numbers is it's finding the average and putting you on that line. And like, the better a driver you are, the cheaper your premium. the worse of a driver you are, the bigger your premium. And they do it based on the law of large numbers. And that question is they tend, with the law of large numbers, they tend to keep it as definition. So you're very likely to see the law of large numbers as this definition question. So Lindsay asked a question in the chat. Are these questions pretty similar to the test questions? Yes and no. When I make the questions, I tend to focus on, do you know the definitions? Do you have the base knowledge? It's not to say that all of these will show up on the exam, but a lot of them can, and you never really know exactly how they will do it. But I like to focus on understanding the content. And in fact, I encourage, I will tell you all day long to stop taking quizzes and tests in your practice course. Like if you have Excel, Kaplan, 80 Bank, or whatever, don't spend more time taking questions, because in your course, they're not likely to be the same as the state exam. They're a lot more wordy, or they word them differently, or they, they use different phrases and so I don't encourage people to take a lot of quizzes over and over again in their online course. It's not productive. Of the courses though, the reason I've partnered with Excel, so I do have a partnership with Excel. They're one of the pre-licensing providers out there. Many people find me after you already have one. You already have ExamFX, you already have Kaplan, that's fine. You don't need to change it. But if you are starting fresh, I recommend you get Excel and you use coupon code QUEEN at checkout, and you will get my courses for free that help you understand your content. Excel has better practice tests that I have seen. And when you go in my Facebook group and you look at the feedback, people will say that Excel's tests match the state exam pretty well. So, but still, even then, don't use memorizing test questions as a way of studying. But I will say, take my Cahoots to 100%. So these games are free, not this exact one because it's private, because Angela, the Ultimate Study Buddy, uses this one for her study groups.
I have a question. I have already purchased Excel. I didn't know anything about your discounted code. So what to do?
So you would have to purchase it like anybody else. So off of Insurance Exam Queen, the only way that the partnership works is if you purchase Excel up front using my code. But if you've already bought it and you didn't use my code, then you just have to buy it off of my website. There's nothing I can do about it because it's not connected that way.
Okay.
Yeah. All right. But take my Cahoots to 100%. And play them over and over again, because my Cahoots are more definition based, not tricky worded scenario based. So of any test questions that I say to take over and over again, it would be my Cahoots, but that would be it.
Okay, thank you.
Yep. All right. A temporary agreement issued by an agent or insurer providing temporary coverage until a policy can be issued. What is that known as?
Agreement.
I say binder.
Yeah, it's a binder. It's a binder. Yeah. And double
Temporary.
it's not that you can't be off of mute, but since everyone is taking the test, try not to say the answers out loud. If you do want to say it out loud, just mute yourself so that no one else hears you. That way everyone has the opportunity to answer the question with what they think. So this is a binder. So a binder, so like when you go to a car dealership and you purchase a car that day, let's say you purchase it at noon and you have no other car insurance. This is your first car. You had 0 car insurance and now you're buying a car. Your car needs to be covered immediately. As soon as you own it, it needs to be covered. So what you would do is you would call the insurance company while you're sitting at the dealership. They'll make you do it because they're not going to let you drive away with the car that you just took on loan and not have insurance. So they're going to make you call at the dealership. You call the insurance company and they're going to tell you, well, your policy is going to start as of midnight tonight. However, we know that you need coverage in order to drive off the lot right now. We are binding coverage for you. We are telling you that right now you are indeed covered to drive off the lot. And if you got into an accident between noon and midnight, we will cover it, even though your policy officially starts as of midnight tonight. So that is what a binder is. And so basically it's temporary coverage until your policy officially starts. And then even if they decide, because it is possible that an insurance company will offer you coverage, but then change their mind. Like if you failed to mention that you had something on your driving record or you don't have an active license, there's a few different reasons why insurance companies might decline you after saying, yes, we will issue. And it usually comes back to your driving record. So if you're not honest with them up front or they don't pull it up front, then there may be a reason that they decline you. But even then, because of the binder, they have to give you coverage for a few days anyway, and then they can cancel you, but they can't just cancel you without notifying you. So a binder does give you temporary coverage. It makes sure that you're able to drive off the lot. And a binder is most common in auto insurance. You never get a binder for flood. And that could be a test question, that binders are not issued for flood insurance. Application plus premium given by the insured. What is this known as? Perfect. Okay. So key thing up here was that it said application plus premium given by the insured. So your answer should be something with insured in it too. Now, what this is coming from is there are 4 elements to a contract. And this is true for any legal contract, even like a rental agreement. If I'm going to rent a house and the lease agreement has to have 4 things. If I'm going to buy a policy, the policy has to have these 4 things. Every legal contract, even a contract for a job, has to come with 4 things: agreement, consideration, competent parties, legal purpose. Agreement, consideration, competent parties, legal purpose. Consideration is the one that we're talking about here on this side. And you need to know, one, the definition of consideration. Well, first you need to know that it's part of a legal contract. So consideration is one of the 4 elements to a legal contract. Then you need to know the definition of consideration. And the definition of consideration is that both sides, both the insurance company and the customer, the insured, need to bring value to the other party. If I'm in a rental agreement, I am bringing the landlord rent money and he is bringing me a place to live in. We are exchanging value. So consideration says that both parties must give something of value to the other party. So that's the definition. Both sides must bring value to the other party. Then you need to know, well, what is the exact value for the insurance company and the insured? And this is asking us, what is consideration on the side of the insured, and the value that the customer brings to the insurer, the value that the insured brings to the insurance company is the application of all of their risks and the premium that they're willing to pay so that the insurance company takes the risks. Because remember, insurance is a transfer of risk. I am transferring the risk of crashing my car. I'm transferring the risk of my house burning down. I'm transferring the risk of getting a medical bill. I'm transferring the risk of dying too soon. I'm transferring that to the insurance company. And so my risks are valuable to them because I want them to take them and I'm willing to pay for them to take them. So when you think of the application is all of your risks: where you live, what car you're driving, how big your house is, your medical history, if it's life and health insurance. You're writing down all of your risks, and your risks are valuable to them because you're willing to pay to give them away. So when we say application, we're saying the risks, all of your risks, and the premium you're willing to pay for the insurance company to take those risks from you. So consideration on the side of the insured is app plus premium. Now, a lot of you chose offer. And the reason you chose offer is because offer is application. Agreement is known as offer and acceptance. So remember, we have 4 elements to a legal contract: agreement, consideration, competent parties, legal purpose. Coming back to the agreement side, agreement is known as offer and acceptance. And the offer is the customer saying, here are my risks. Because think about like a rental insurance application. You're not paying them rent yet. You're saying, I am willing to pay you rent if you give me this lease. So you're not paying them yet. You're offering to pay them rent. You're offering to be a tenant, but you're not actually paying. You may pay an application fee. Thank God insurance doesn't have application fees. But you're not giving them anything yet. You're not giving them the full value of the rent money yet. So agreement is just the first step that says, here are my risks of crashing my car, my risk of my house burning down. Here are my risks. So offer is just the application. Consideration is application plus the money. I like to think of it with like a wedding ring. Okay. So like when you get married, you get like two rings, right? The first one is the fanciest one. This one is your engagement ring. And this is, I'm offering myself to be your spouse. But until you seal the deal, so that the offer is the same, like this is the application. I'm applying to be your spouse. I'm applying to be your spouse. Once they accept it, okay, so that's the acceptance part. It's not official until you actually get married, and now your money is my money. And then but technically you wear them like this, right? You wear the one on the bottom, but it doesn't matter. So that's one way to think about it too, is why you have offer, which is app only. And then you have consideration, which is app plus premium. The offer is like the proposal. Will you marry me? You get 1 ring. The consideration is, now we are actually married. I still have the application and I have your money now. So that's what makes consideration and an offer different. And you got to make sure you separate those two, because you can, get those wrong. Some of you also chose acceptance because of offer. And that's the agreement is known as offer and acceptance. But this is consideration on the side of the insured. This is the value that the customer is giving to the insurer. This is the value that the customer is giving to the insurer, the application and the premium that they're willing to pay for it. Any questions on that side?
Okay, I have a quick question.
Yep.
Okay, application is the insured, the ED. The premium is given by the insured
ED.
ED. So when I look for the question, I want to look for consideration on the side of the insured. So that's exactly what this concept is saying, right?
Yeah, and you'll be asked both ways. So see red and yellow, those two themselves can be state exam questions. What is consideration on the side of the insurer? We haven't even gotten to that one yet, but what value does the insurance company give us? The value that the insurance company gives us is promise to pay.
Right.
And then what value do we give them? What is consideration on the side of the insured? App plus premium. Both the red and the yellow are possible state exam questions. They'll say, what is consideration on side of the insurer? What is consideration on side of the insured? And I recommend to read the questions like that. Emphasize the ER and the ED so you pay attention. And I always say insurer, insure, You gotta separate them. And then another thing too, if you get confused, ER, insurer, who do you go to in an emergency? The ER room? You go to the insurer for an emergency. I
Insurer.
crashed my car. I call them because I'm in an emergency. The insured is dependent upon the insurer.
Perfect. Got it.
Perfect. Yep. Those are my memory tricks. All right. Any other questions on this one? This is a tricky topic. This is actually going to come from, if you have a chapter called General Insurance on your exam breakdown, this will be part of that chapter. If you have a chapter called Policy Provision and Contract Law, it'll come from that chapter. And policy provision and contract law is a big one. All right. Owned by shareholders, issue non-participating policies and dividends are taxed. Stock companies, yes. Okay, so these are going to come down to two answers. When they start talking about ownership, policies being participating or non-participating, and dividends, your answers are always going to come down to mutual and stock. Stock is owned by shareholders. So S, shareholders, stock, shareholders, stock, shareholders, stock. A stock company is one that is bought by people who don't have a policy. They own the company, but they don't have a policy. And that's why it's issue non-participating. When you see the word participating, they're talking about ownership. Mutual does have participating policies because in a mutual company, the owners are actually the policy owners. In a mutual company, the owners are the policy owners. And that means that in a mutual company, you get participating policies. Okay, so shareholder stock, non-participating stock, and then dividends are taxed is also stock. And I do have a YouTube video that goes over this. I'd highly encourage you to watch it a few times. And ultimately, it comes down to memorizing these bullet points. Stock, owned by shareholders, stock, issue non-participating policies, stock, dividends are taxed. Mutual, owned by policy owners, issue participating policies, dividends are not taxed. Dividends are basically extra premium left over. An insurance company will look at all of the people they have and they'll go, okay, according to the law of large numbers, we statistically predict that we will have $10 million in claims based on all the people that we're offering coverage to right now. But that is a prediction, not a guarantee, right? The law of averages is there's an average, but that doesn't mean that that's set in stone. So they predict law of large numbers, how many accidents they have, but it's not guaranteed. So let's say the insurance company estimates, according to the law of large numbers, that they will have $10 million in claims, but they only have 8 million. They had a good year, not as many accidents, only $10 million or only $8 million of the 10 they expected. This means they have an extra $2 million collected for claims that weren't used for claims, and it's not needed. In a mutual company, that money will go back to the people who paid it, which is the policy owners. Because who gets extra money in a company? The owners of the company. In a mutual company, the owners are literally the policy owners. You are the ones paying the premium and you are the ones who own the company. So in a mutual company, if there is excess premium left over, they give it back to you in the form of a dividend. And if it's coming back to you in the form of a dividend, you don't need to pay taxes on it. You already did. Because how do you pay your premium? You get it, you work a job, you get a paycheck, that paycheck has been taxed, and then you pay your premium. So when you're paying your car insurance premium, you're paying it with already taxed dollars. So if you get any of it back, you're not going to be taxed on it again. In a stock company, they have non-participating policies. So in a stock company, the shareholders never pay premium. The shareholders never pay premium. So when they receive a dividend of excess premium, that is money that is coming to them. That is income to them. That is them making money. They never paid it to begin with, and now they are making it. So in a shareholder, when they in a stock company, if you're a shareholder in a stock company, when you receive a dividend, you are going to be taxed on that because it is money that is coming into you, not money that you've ever paid before. Okay. So any questions on that? And there's something on my desk that is echoing back to me. I think it's the can. It's driving me crazy. Get rid of it. Okay, so I don't see any question. Okay, Kim, you came in late, that's fine. You can participate by either, at the bottom of the screen, there's Kahoot.it and then the game pin. So if you go to that website, Kahoot.it, and then you enter in the game pin, you can join if there's not already 20 people in here. There might already be 20 people in here. I think there is.
Yeah, there's 48.
Okay, so then you can just, but not necessarily in the Kahoot game though.
Oh,
So if you're able to join in that way, but if not, just follow along. So like when you get
Okay.
the question on the screen, write your answer down, see how you did.
Okay.
Yep, okay. Both parties bring something of value. We just talked about this. We just talked about bringing value, bringing value. We talked about wedding rings, bringing value. There we go. Value is consideration. Consideration is both parties must bring value to the other party. And again, kind of think about the marriage thing. Consideration is I apply to be your spouse. Will you be my spouse? And here's all my money now that we're married. Legally speaking, when you get married, your money is my money. Okay. Unless you sign a prenup, your money is my money. So when you get married, you agreed, you already had, you had the offer, you had the application, I am applying to be your spouse. And then you have the money as well. So remember, consideration on the side of the insured, consideration on the side of the customer is at plus premium. But consideration itself, though, is the definition you need to know, which is both parties bring value to the other party. I like to think about consider the other person's feelings. When you get married, you want to be considerate of your partner. What are their wants and needs? What are my wants and needs? Will we be able to do that to each other? You are considerate of your partner. When you don't get married anticipating that you give and never get anything back. You expect that I give to you, you give to me. We give to each other. We take care of each other. If you're in a marriage where you're only giving and not receiving, that sucks for you. That was my second marriage, which ended, thank God. But so considerate of each other. You want to be considerate. I'm going to give you value. You give me value. Another way is break up the word. Consider rate. Consider rate. Consider the rate. Consider is what do they want? Rate is money. Rate, how much money? Rate. So consider rate. What do they want? They want money. Consideration is value. Bring value to each other. So great job, guys.
Consideration on the side of the insurer is offer, right?
On the
Or-
insurer,
Yes,
on the
acceptance,
side of the insurer is promise to pay.
but acceptance, like a while ago that we were half and half, and I was going to ask you that. So acceptance is,
Acceptance is part of agreement.
okay,
Agreement is known as offer and acceptance.
And then, okay, I got it.
Yeah, this one, agreement and consideration are the two trickiest ones because they overlap with offer application. And that's why I have a couple of different YouTube videos on that. And then inside my gold series, we also break it down and we draw charts and graphs and stuff. So it is a more complicated topic, but they love to ask about consideration and agreement because you're looking at one, you need to know all four elements: agreement, consideration, competent parties, legal purpose. Then you need to know the definition of agreement, which is agreement is known as offer and acceptance. Then you need to know what is an offer. An offer is a customer submitting an app. Then you need to know what is agreement or acceptance. Acceptance is the insurer issuing the policy. Then you need to know consideration is one of the elements. Then what is the definition of consideration? Both parties must bring value to the other party. Then you need to know what is consideration on the side of the insurer, promise to pay. What is consideration on the side of the insured, app plus premium? So those two alone are like 6-8 potential questions just on those two concepts alone. And they love to ask about contract law. So if you're still struggling with agreement and consideration, offer, acceptance, consideration on both sides, you got to spend some time there and make sure you sort them out. Okay, next question. What type of risk is insurable? What risks can you insure? Pure risks, pure risks. So there are two types of risks: pure and speculative. The two types of risks that they teach you about anyway. So the two types of risks that they teach you about in the exam content is speculative and pure. Speculative is like gambling. I think of speculative as going to Las Vegas. They're not going to cover you for gambling. You're not going to find an insurance policy that says, if you go to Vegas and lose all your money, we'll pay you back. You're not going to find that. It doesn't exist. Pure is a pure risk saying, I may crash my car, I may not. My house may burn down or it may not. I'm not gaining anything. I'm not investing anything. I'm not gambling anything. I mean, technically home ownership and car ownership is a gamble in a way, but not the same as a slot machine. Okay. It is quite different. So a pure risk is known as loss or nothing. I either crash my car or I don't. My house either burns down or it doesn't. Insurance companies will cover pure risks. So just think, what's insurable? Pure. Pure. Something that is pure is good. If something is pure, it's good. We like it. So they will cover pure risks, but they do not offer coverage for speculative risks. That is gambling. That is Las Vegas. They don't cover that. So only pure risks are insurable. When the customer submits an application, just the application is talked about here. Just the application. Just the one ring. Will you be my spouse? One ring.
I think we've seen this question, this answer before. Customer work when the customer submit the application.
We had the question before that says application plus premium, which is
Okay.
different.
All right,
This
gotcha.
is app only, which is offer.
Oh.
And there may be duplicate questions. That's okay. We're checking to see how we do on them.
No, I see the answers. I meant to say the selection. We've seen it before. Consideration.
Oh, yes, they're the same.
Mhm.
Yeah, because they all come from the same stuff. But the correct answer here is different. This is the customer submits an app. So this is me filling out my risks and offering my risks. Remember, insurance is a transfer of risk. I am transferring the risk of my house burning down to you. I'm transferring the risk of my car burning down to you. I'm transferring the risk of getting a medical bill to you. I'm transferring the risk of dying too soon to you. You transfer your risks to the insurance company. And you do that with first making an offer. You write it down, you fill out the application. This is where I live. This is my driver's license number, which will tell you my driving history. These are the cars that I own. These are the people in my house who also drives my cars. I am offering my risks to you. Because like when you call an insurance company, they're going to ask you a bunch of questions. That is you filling out an application. And then they'll say, give me a minute. I've got to hit submit in the system and see what comes back. That is you submitting an application.
Okay.
All the answers, you submit the application. You are offering your risk to them. You haven't married yet. You're not official yet. You simply offered. That's the one wedding band, your engagement ring. Once you fully commit and you say, okay, now you can have my premium money, that's when it moves to consideration on the side of the insured, the customer. Okay. Which type of risk has a chance of loss or gain? We kind of just talked about this. Oh, that's cool. It said that I'm only allowed 20 players, but there's clearly more than 20 of you in this game. So that's awesome. They let the extra people in. Okay, so this one, a chance of loss or gain. This is winning or losing. This is Las Vegas. You can win or you could lose. You can get money, you can lose your money. That is speculative. So speculative is gambling. I could win, I could gain. I could lose, I could win. It's possible. Pure is loss or nothing. Pure is I only crash my car. Your car doesn't just automatically make money. You're not, I mean, technically, houses can go up in value, but generally speaking, it's not, I buy my house and I immediately win $1 million like gambling is. Okay. So when we say chance of loss or gain, we're talking about gambling and like immediate. I put my money down, I immediately win or I immediately lose. That's a speculative risk. It has a loss or gain. What is known as the transfer of risk? Ooh, we've talked about this. I've said it a few times. Perfect. Insurance is the transfer of risk. Insurance is a transfer of risk. Insurance is a transfer of risk. Yes. Sometimes they will trick you and they will say insurance is a transfer of risk of loss. But the key, most important answer is risk. So like sometimes they'll get insurance is known, or what is known as a transfer of risk of, sometimes the question will be, what is insurance known as? Or insurance is known as the transfer of ... question mark. So sometimes that's a state exam question. Insurance is known as a transfer of, and you will have risk, loss, and two other things. Some people choose loss, but the best answer is risk. Risk comes first. It's technically insurance is a transfer of risk of loss. You are transferring the risk first, not the loss. You buy insurance before you have the loss, right? You buy insurance before the car crashes. Risk is more important than loss. So if they ever give you that tricky question, insurance is known as a transfer of, and you see both risk and loss, always go with risk, okay? All right, and I need to go pee really bad. This pregnancy thing has a thing. We're gonna go ahead and take a pause here real quick. I'm gonna pause the recording. All right. So coming back from our break. Next question. When a company indemnifies another, so when one company indemnifies another company. Reinsurance, yes. So reinsurance is when one company backs another insurance. Now, reinsurance is one company backing another company. You also have something called the Guarantee Association. The Guarantee Association is insurance for insurance, just like reinsurance is. But the difference between reinsurance is it's one insurance company backing another. The Guarantee Association is the state backing the insurer. So it's the state is backing the insurance company. And that's the difference between reinsurance and the Guarantee Association. Between the customer and the insurer. What says that?
Unilateral is one-sided, right?
Yes, it is.
Mm-hmm.
Can I change my answer? God dog it.
So it's personal. So insurance policies are personal. They're between the insurance company and the customer. That's a personal policy. No one else is involved in your policy. Now you can have other people covered on it, but it's still a personal policy between you and the insurance company. So between the customer and the insurer is personal. And then, yeah, unilateral is a one-sided promise. One-sided promise. Unequal exchange, where the customer pays a small monthly premium, but the insurer pays a very large claim. What is that known as?
Ooh, I know this one.
AL.
I remember this one from the video. I better get it right.
Okay, and that is I can't see aleatory, yes. And then again, if you're check your mute and only unmute yourself if you're asking a question. That way, when people are answering, they just don't hear any of the, chit chat. Because even when you're taking the test, it's got to be silent. I like the music because it's fun, but if you want to talk out loud, just mute yourself so that no one else is hearing it. But this is aleatory or aleatory. Aleatory is an unequal exchange, This is where, and it's unequal because when you buy your insurance premium, like my life insurance, for instance, is $28 a month. And even if I pay that for 1 month and then die, my claim payout is $250,000. $28, $250,000. Very unequal. So insurance policies are known as aleatory. They're an unequal exchange. That's not true of like a rental agreement. Like if I'm renting a house, it's pretty equal exchange. Rent money for the place to live in, it's pretty equal amounts of money. Insurance contracts are unique in that they are aleatory, an unequal exchange. Now, if you never file a claim, there is no unequal exchange. But if you file a claim, it tends to be large amounts of money. Like even a car accident, you crash your car, you're looking at, $20,000 to fix the car, another $20,000 for someone's medical payments. You're looking at a ton of money when the insurance company pays out a claim. So that's unequal. So I like to say, like, when you say the word, whether you say it aleatory or aleatory, is like you're going back and forth. And I think of like the scales of justice, where it's like it's never balances. It's an unequal exchange.
Okay. Now I got it.
Yeah, perfect.
Okay. I like that. Alley, unequal scale. Okay.
Yes. Okay. And then I see a question, Lily. Pretty sure I have a YouTube video on the accept questions. Blank is lying on purpose.
That has something to do with ethics.
Okay, so this lying is an ethical question. Yes, for sure. Like you're not ethical if you're lying. But when it comes to hazards, there are 3 hazards: physical, moral, and morale. And you just want to know the basic definition of each one. Moral is lying on purpose. I am purposely lying. I know what I'm doing is wrong. I know that I've had 5 car accidents, but I'm telling you I've never had a car accident. You are lying on purpose. So a moral hazard is lying on purpose. All right, and I see somebody raised their hand. You can just ask your question, just unmute and ask.
Okay, can you hear me?
Yes.
Okay, so I learned a trick for that moral and morale.
Uh-huh.
If it's no E, that means you're lying to me.
Yes.
I heard that on the video.
Nice.
Yeah.
Probably Angela said that.
Also, I have a question about hazard, since we're on hazard.
Sure. Uh-huh.
One of my test questions today was saying that the newspaper, a guy delivers newspaper, blah, blah, blah. He comes home, he set the newspaper next to the fireplace.
Hazard, physical.
Physical, oh, I got that wrong. Okay.
Yeah, because if highly flammable material is next to an open fire source, that is something you can see and touch. It is a physical hazard.
Okay.
So physical hazards are things that you can see and touch. They're material, they're structural.
Okay. Thank you.
Yep. One-sided promise, only the insurer is legally bound to do anything. Yes, unilateral is that one-sided promise. So unilateral, one-sided promise. Only the insurer is legally bound. If, as a customer, if we fail to pay our premium, they simply cancel the policy and move on. If the insurer fails to pay the premium, if the insurer fails to pay a claim, we can sue them. Like if they said, we will cover you if your house burns down, and the house burns down and they say, no, we're not going to rebuild your house, you can take them to court. You can sue them for that. But the insurer will not sue you for not paying your premium. They'll simply cancel and move on. So unilateral is saying that only the insurance company is legally bound to do anything. Only the insurance company is making a promise. We don't promise the insurance company anything. We give them our application, we tell them about our risks, we pay our premium. That's it. We're not promising, I will only drive the speed limit. I will never put newspapers next to my fireplace. You're not promising them anything, okay? Only the insurer is making a promise. Only the insurer is legally bound to do anything, and that is unilateral. Unilateral, one-sided promise. Only the insurer is legally bound to do anything.
One thing I use for the unilateral is UNI means one.
Ooh, yeah. All right, known as offer and acceptance. Agreement, yes. Agreement is known as offer and acceptance. Agreement is known as offer and acceptance. Agreement is known as offer and acceptance. Consideration is bring value. So remember, I consider what you want, you consider what I want. We bring value to each other. Agreement is offer and acceptance. And yeah, with the uni thing, uni means one. Like if you're in the Marvel world, no, not, is it Marvel or the other one? Like when they say multiverse, like we say universe, it is one verse. We are in one world, one thing. Multiverse is where there's more than one. So uni means one. Or like like a universe, college, a university, it's one place that you go to for all the stuff you need. It's one. Uni is one. The insurer assumes I know what a policy is because I have a producer's license. Insurer assumes is the key word there. Implied authority, yes.
Dang it, I
So-
missed that.
You can literally take implied authority and rewrite it as insurer assumes. Because implied authority is the insurer assumes that you can take care of it, that you can handle it, that you know certain things because you have taken the test, for instance. So implied authority is the insurer assumes. Remember, you have three authorities: express, implied, and apparent. Express is written down. You know you're allowed to do it because it says it. Implied authority is where the insurance company assumes that you can do it or that you know about it because you work for them and or you have a license. And then apparent authority is where it's not a true power, it's not a true authority, but it's something you need to be aware of, because this apparent authority is where the customer assumes, and the customers can be wrong. And so apparent authority is understanding that the customer might assume that I have more power than I do. So I need to be careful with what I say. Otherwise, they might think I have, more powers than I have. So apparent authority is not a true authority. This is why it's called apparent, or perceived, I mean. Sometimes apparent is known as perceived, and that could actually be a test question. Apparent authority is also known as perceived authority. The customer perceives you to have it, but that doesn't mean you actually do. Perception is like how one person sees things, but perception can be different for everybody. This is what I was talking about last night on my live. One person could look at a 68 as, oh my God, I failed. This is the worst ever. And another person's perception could be, I'm only 2 points away. Hell yeah. Right. And I always choose the positive perception because it helps you in your energy. So, but perception is what I think is true, but that's not necessarily is true or is correct. So apparent is perceived. I think you have that power, but that doesn't mean you actually do have that power. But for implied authority, just literally change the words to insurer assumes. What increases the chance of a risk occurring? What makes a risk more likely? Hazards, yes. Hazards make a risk much more likely to happen. So a hazard increases the chance of a risk. Hazard increases the chance of a risk. Now, you're not necessarily wrong when you say physical, moral, or morale, because those are all hazards. But it didn't specifically say material or structural. It didn't specifically say lying, and it didn't specifically say carelessness. So this is where we got to go general and go with all hazards increase the chance of a risk. And they can give you a tricky question like this. You're not wrong to say physical, moral, morale, but you won't get the question correct because they're looking for the overall definition, which is all hazards increase the chance of a risk occurring.
Let me use one example that I saw. Let me take my, for example, driving during a high traffic time. That's a hazard. Is that correct?
Yeah, it would be a physical hazard.
Okay. All right.
Yeah. Material and structural things you can see and touch. You all know this. You all know this.
It has to be
Physical, yes. Physical things are things that you can see and that you can touch. Material and structural. Now, if you're taking the life and health exam, physical is like body stuff, like cancer and illnesses. You don't necessarily can see and touch those sometimes. But for the property and casualty exam, think of material and structural things I can see and touch. The crumbling foundation, the rickety staircase, the ice on the road. Those are all physical things. The insurer's headquartered and sells in Arkansas. They mentioned only one state. Domestic, yes. So domestic is one state. Now, in order to sell, you do have to have a certificate of authority. So a certificate of authority allows you to sell. But when they're talking about being headquartered and where you're selling, they're talking about domicile, which is either going to be domestic, foreign, and alien. And since it's only mentioned one state, it's going to be domestic. If they mention two states, it's going to be foreign. And sometimes when I say they mention two states, like we had a question in the Facebook group today where it said the insurance company is headquartered in one state, but they're selling in another state. No names were mentioned, but when they say one state and another state, that's two. So anytime they mention two states, it's going to be foreign. And then if they mention the word country, it's alien. The customer assumes I'm an agent because they see me studying in the office at Allstate. The customer assumes. Apparent authority, yes. So implied is insurer assumes. Apparent is the customer assumes. And you can think of it this way, like a parent comes in to get life insurance, or a parent comes in to buy car insurance. A parent, right? Is one kind of just, it's a customer. The apparent is the customer assumes. A customer can expect the coverage if an agent implied it during the sale. Ooh, that's weird. Two answers are selected as correct, but it's just reasonable expectations. This reasonable expectations doesn't show up on everyone's exam. It's only in probably about half the states, but this is how they generally ask it. If an agent said it during the sales presentation, a customer can reasonably expect that they're going to get the coverage. So that's reasonable expectations. Cannot be against public policy or break the law. Legal purpose. So this is going back to the 4 elements of a legal contract: agreement, consideration, competent parties, legal purpose. Legal purpose is like Joe Exotic. Okay, so why is Joe Exotic in jail? He paid someone to go murder someone else. He had a murder contract. You're not allowed to have a murder contract. It breaks the law. You're going to be thrown in jail if you try to have a murder contract. So any contract that you establish cannot break the law, cannot go against public policy. And that's what legal purpose means. So legal purpose is I cannot break the law. I cannot go against public policy, which is just another way of saying the law. And that legal purpose is the contract has to be established for a legal reason. Yeah, and they're not really tricky with this one. They just tend to stick to public policy, cannot break the law. When the insurer issues a policy, what is this known as? Acceptance, yes. So agreement is known as offer and acceptance. So of the 4 elements of a legal contract, agreement is known as offer and acceptance. The offer is the customer submitting an app. And if the insurer accepts that app, it means they're willing to issue coverage. So acceptance is the insurer will issue a policy. You make an offer of your risks. I offer my risk of crashing a car to you. If the insurer accepts it, they will issue a policy, and now you're in agreement. A cause of loss like fire or hail, what is that known as? Peril. Peril is the cause of loss. We get insurance to cover perils, the peril of fire, the peril of lightning, the peril of hail, the peril of theft. So perils are the cause of loss. Perils are the reason we file a claim. I filed a claim because my house burned down in a fire. I filed a claim because my car was stolen, theft. Okay, so perils are the reason we file a claim. Allows the insurer to sell in the state, making them admitted and authorized. Certificate of authority, yes. So certificate of authority allows the insurer to sell in the state. And when you have a certificate of authority, you're known as admitted. Admitted is authorized. Authorized, admitted, admitted, authorized. That's what a certificate of authority is. Never, ever, ever choose the answer certified. I know it's got the word certificate in there, but you're never choosing the word certified. Certificate of authority is admitted or authorized. Not under the influence of drugs and alcohol, sound mind, legal age. Felons are okay. Competent parties, yeah. So competent parties, so that's again going back to the 4 elements of an insurance agreement, 4 elements of a legal contract, I'm sorry. Agreement, consideration, competent parties, legal purpose. So competent parties are saying that you're only allowed to sell insurance to people who are not under the influence of drugs and alcohol. They have to be of sound mind. They have to know what they're doing. They have to be old enough. You know, you can't sell insurance to a 5-year-old. And felons are okay. The reason we put felons are okay is because that's what they usually try to trick you on. They'll say all of the following are competent parties except, and people will pick felon because they're like, oh my God, a felon is bad. Felony is so bad. No, felons are fine. As long as they're old enough, not under the influence of drugs and alcohol, and know what they're doing, you can sell insurance to a felon. The insurer is headquartered in California and sells in New York. 2 states. Foreign, yes, foreign. Foreign is 2 states. Okay. I'm going to go ahead and I want to show you guys a couple of things. So I'm going to actually, I wonder if I can, I'm trying to end the game, but I can't see the end of the game. Sorry. I want to end it, but it won't let me end it. Okay, never mind. So we have 10 minutes out. I know we have like 9 questions. We're almost to the end, but I wanted to make sure you guys know what's coming up next. And again, my voice is hurting and I got to leave at 8 so I can go eat the amazing dinner that he's cooking. But I want to make sure that I show you guys some things that are coming up. So one, make sure, so somebody had asked about accept questions, and I want to make sure you guys are aware of this. insuranceexamqueen.com. One, that's my website. So you can go to my website to find all of my stuff. Okay. These are all of my class series and all of them work in all states. Okay. All of these work in all states. So we have platinum, which is ability to talk to me and ask me questions as you're studying. You have gold, which is the most robust of these courses. Platinum includes gold and silver and bronze. Gold, though, is the best in terms of it's got student notes. It's got practice questions. It's got the most videos in it. Silver is about 14 hours, where gold has like 30 hours of video. Silver has 14 hours, and then bronze has 8 hours. And then you have life and health. We have platinum life and health, and then we have silver life and health. Now, in addition to these class series that I sell, and by the way, like if you don't have a lot of money available, you can buy bronze, and then inside of bronze, when you look at the class content, there is a coupon for you to upgrade. So if you buy bronze at 27 and you later want to get gold, you only have to ever pay the difference. I'll never make you pay twice for the same thing. And when you get gold, you actually get bronze. So gold is going to include silver and bronze, which is why it's called gold. It's the best. Again, platinum is technically the best one because you get to talk to me. But in terms of the videos, the student notes, the practice questions, all that's going to be in gold. Now, free resources is what I really wanted to show you. So one, how do you get these Kahoot games again? How do you play these Kahoot games? You click it here. You can play these all by yourself. Now, when you click on this and you go to Kahoot, they will try and make you pay. Like they'll say, why don't you buy an account? You don't need to buy an account. Just click skip when they talk about a membership. Then you have the YouTube channel if you're not already there. You have the Facebook support group if you're not already there. Then what I really wanted to show you, I need to also put live classes on here, is the property and casualty personal line study notes. These are notes that are available free to everybody. And this is a whole list of all these different notes. And I swear, some people could be able to pass just by reading these alone, and they're free to everybody. Okay. One of them should be accept questions. Do I not have it on there? It should be on there. Oh, I guess not. All right. I'm going to add accept questions on there because I do actually have notes on accept questions. So I will get that in there. Let me actually grab it for you real quick so that you have accept question help.
Thank you. I was hoping you did it so I could look it
Yep,
up.
no problem.
Last thing I'm gonna do tonight, then I'm gonna quit.
Yeah, I thought I had it on there, but I guess not. So, but I'll share it with you right now. Okay, I'm putting it in the chat box.
Amazing. I really liked it when I upgraded. And you're right. You only made me pay the difference.
Yes, you only will ever pay the difference from bronze, silver to gold. All right, I put it in the chat box so everybody can grab that. Okay, and then so all of these notes, like this like general insurance, it's like huge. Like if you go into this one, I talk about everything that we just took a test on. Like the law of large numbers is there. We talked about that. Hazard versus peril is there. name policy, open policy, warranty representation, elements of a contract agreement. I even give you a chart. Okay, so loaded with notes on these free resources. I don't think people use these notes enough. And they're free notes. There's better, bigger notes in gold that go right along with the student video, but these ones are free to everybody. And I go over all of this stuff. So you can grab that on the general insurance. The other thing that I have coming up is we have a insurance class coming up here soon. calendly.com/insurance. I need to put this also on the web page because right now my courses are separate from where I book my online classes. So coming up this next weekend on the 11th and the 12th, we have what I call a PC Listen and Learn. Now, normally I charge $99 a day for a boot camp. The PC Listens and Learns are a little bit cheaper. So this is the cheapest way to get a live class with me is the Listen and Learns. The reason they're Listen and Learns is because one, you will not get a copy of the recording, where if you paid $99 for a boot camp, you would. And then you also don't ask me questions while I'm recording. I'm basically making new videos that will become part of one of the series. Like I'm always improving bronze. I'm always improving gold first, but I'm making new videos for my class series. And that's what I do during these PC Listen and Learns. I teach better when people are in front of me. So you buy a cheap ticket, you get a ton of information, you get to learn a lot of stuff. You just don't ask questions while I'm teaching, but if you have questions at the end, I will answer them. So I'm going to put the link here, and then any other classes that I have going on, they're available here as well. But the Listen and Learns is happening February 11th and 12th, so this weekend. So I'm going to put those in the chat box as well. And those are the two classes coming up for PNC. I don't have any other PNC classes this month. And then if you guys have life and health, I also have, if you guys move to that, because a lot of you will have to study both. I have life and health support as well. And then again, I have the platinum and the silver available for life and health. PNC is like pink and life and health is yellow as part of the series. I also have a sales class. So if you're worried about how to talk to customers, how to say things, the sales class, and there's actually 2 recordings in here available. So we had a sales class in December and then a sales class in January. You pay $27, you'll get both of those, where people paid $27 for a live ticket. So just wanted to share those things with you. All right, 3 minutes before I go eat my steak. So any questions?
Oh, yeah, I just had a quick question. It may be something else that I saw, but I thought I saw, did you add something on the gold package?
I'm always adding stuff in there.
Yep.
Wait, what was that?
I'm always adding stuff in there.
Oh, okay. So I guess my question is like a while back I bought the gold package, but like anytime that you add stuff, it will automatically. Oh, okay, cool. Thank you.
Yep. And as long as you,
Good question.
all of my courses come with 100 days access. So any changes I make are immediate for you available.
Oh, okay. Thank you.
Good.
Yep. There is PNC Platinum. Yeah. So Eduardo, if you bought the Platinum, make sure you go into the dashboard for Platinum and you'll see how to join the group where you get to chat with me throughout the day as you study. And then Platinum also has 30 hours of additional unreleased content. All of the Listen and Learns that I've been recording are available in Platinum. I haven't put them anywhere else yet. I will eventually use them for when I upgrade gold again. Because basically right now in silver, bronze, and gold, they're recorded classes where people ask questions. There might be some interruptions. We might go off topic for a minute. The Listen and Learns are just me talking with 0 interruptions, and those will eventually replace gold, but I've got to build up the library enough to make that possible. But right now, all listen and learns, and including the one on the 11th and the 12th, will include platinum. And that's what makes platinum so amazing, is not only do you get to talk to me while you're studying, not only do you get 30 hours of additional video, you also get to attend every class I offer for free during your 100 days access.
Oh, okay.
Could you put your website back in the chat if you don't mind?
Yep. Insurance exam queen.com.
Thank you.
Tracy, how soon is a good time to take the test? 2 weeks of studying. Everyone's a little bit different, but 2 to 4 weeks is the average. I mean, I've worked with some people who studied for a year. I work with some people who studied in a weekend. It really, really, in law of large numbers, is 2 to 4 weeks though. And the more time you have to dedicate, right? If you're dedicating an hour a day, closer to 4 weeks. If you're able to do 2 to 3 hours a day, closer to 2 weeks. All right.
So
Go ahead.
Is this a good field to go into when you're retired?
Yes, especially Medicare, because if, so this is PNC property casualty, but you could do health, you can get all of them. You could sell all of them at the same time, but Medicare is really great for retirement because now you're talking to your friends and you're getting them signed up for you have to sign up for Medicare. The government makes you, and you're making money every time you sign one of your friends for Medicare.
So do you have to get licensed in Medicare?
You have to get your health license first, and then there are some Medicare certifications. Yes.
Okay, I have my health. Okay.
Mm-hmm. But yeah, I mean, anybody, I mean, insurance is great for anybody. I mean, easy $100,000 career. If you know what you're doing and you're with the right company. There are some bad situations and some bad companies. Everything comes with good and bad. Do your research, ask a ton of questions, and it can very easily be $100,000 career, if not more. That's
true. That's true.
Minimum baseline average that includes part-time and full-time people is $52,000 a year. So that includes people who work at a call center and make no commission. If you work in a place where you earn commission, the sky's really the limit.
Yeah, that's true. I maxed out 103 this year.
Yeah, see? What are you selling?
I sell auto, homeowners. Yeah.
103 this
Auto
year.
and homeowners.
That's
Already-
fantastic.
Already 100. Already 100.
Already 100. I'm trying to get 300K. To a commercial.
I make
So okay, so you're trying to add that. I was like, why are you here then? It's commercial. I see it. You're trying to get the commercial.
Yeah.
Gotcha.
Yeah, that's what everybody keeps asking. I'm like, I'm just trying to get the commercial.
That's amazing.
It's
Yeah. And if
hard.
you can share
Yeah.
that in the group, by the way, like I'm already an agent selling auto and home, making 103 a year. I'm adding on commercial to make even more money. Like, hell yeah. That's very encouraging for people in the group.
So are you
I sell anywhere from 1.8 to 2.5 million by myself.
In premiums. Yeah. That's amazing.
In premium, yeah.
independent?
I'm the number one for my company. Yeah.
Are you-
Clearly.
Or
Get
do
it.
you work for a company?
Yeah.
Oh.
Yes, ma'am. I already do.
What's your name?
My name's April. My name's April, and yes, y'all, we are hiring. We need help, and we're all around the United States.
April the Great. Okay.
April the Great, yeah.
April, you can feel
That's
free to
just-
make a post in the Facebook group if you're hiring. That's fine. I'll give
Sure.
you permission for that.
Sure,
All right,
yes,
I gotta go
ma'am.
though. He's making steak. I gotta go. I love you all so much.
See ya.
I told him 8 o'clock. I will be done at 8
Go
o'clock. And he's
dinner.
already gonna bitch at me about these 3 minutes. So I better go.
Have a
I'm
good
so
night.
weak.
All right. I love you all so
See
much.
ya.
Sending you
Thank
all the
you.
loves, all the vibes.
I love you
Pass
too.
the exam.
Do my meditation now, and then I'm going to bed. Your
Yes,
meditation
yes.
is the goal.
All right. Bye. I'm ending it. Bye.
Bye.
Bye. Bye. Love you.